Okay, so those who are already there in our this existing batch, from 18 there is new batch starting. Okay, so and you guys are still lagging behind or not able to complete certain topics, you can join any specific day or any topic in that batch. Okay, daily in the group, I'll share that today we will be starting with this topic, with any other topic. So if you feel that you want to attend it live, so you can join that next batch also. All right, so let's start with the today's session. Hi. Okay, I hope you guys have just gone through a little bit theory of this topic. This is what is a qualified business income deduction. Okay, qualified business income deduction means, let's say you are doing any business, a schedule C. Okay, a schedule C will be used. Whatever business you are doing, you will have a income and expenses, right? So if you are doing a qualified business, you can get an extra deduction. See, standard deduction you are going to get. Just below the standard deduction there will be a QBI deduction. Means you can there is a whole calculation which we will see, that much amount you can get extra as a deduction if you are doing a business. Okay, this was effective from 2018. Amount of deduction is what? 20% of qualified business income. So there is a definition of a qualified business income, that is all your gross receipts in your business minus all your expense. Okay, means net income only which is pertaining to your schedule C. What is schedule C? It is related to sole proprietor who is doing business. Okay. Now let's say if a person is not a sole proprietor, he is not doing any business, but he is a partner in a partnership firm or a shareholder in a S corporation, right? So when that partner is going to receive his share of income, okay, his share of partnership income or S corp income, on that share also you can take a 20% deduction. Okay, amount of deduction maximum. This is a maximum quote which is of a qualified business income, 20% of a QBI. Okay, now understand the definition. There are two definitions which you'll have to understand. One is QBI and one is taxable income. Okay, what is QBI? Qualified business income means only your business income which is pertaining to your business or a partnership income or a S corp income. That is your QBI. Second is taxable income. What is taxable income? All your page 1, 1040 page 1, all your incomes, earned, unearned, all incomes, all the capital gains, everything will be added. That is your total taxable income. Okay, any question till now, guys? Okay, I think just a minute, guys. Yeah. So see, total taxable income, we are clear. QBI, what it is just related to your business. Now, sometime what will happen? They will give you total taxable income and they will give you in the question as a net capital gain. So you will have to just reduce this net capital gain from the total taxable income. So you will get this QBI, qualified business income. Only the share of your business income is your qualified business income. It can be from a sole proprietor, like you're individually doing a business, or a partnership income, or a S corp income. Okay, partnership S corp are the entities which you will learn in the part 2 when we do that. So in partnership and S corp, whenever you are you are owning a certain percentage, you will get a income share of your percentage. Okay, so that much will be called as your qualified business income. Okay, so total taxable income, whatever is your total taxable income, just reduce net capital gain from it. Okay, first step is clear. Now, calculation of a qualified business income is given. Whatever is your ordinary business income minus ordinary deduction. So can I say this is nothing but your gross receipts minus all expenses which you are incurring. Once you reduce it, it is your qualified business income. Okay, if this two information is given, you can calculate like this. If nothing is given, only taxable income is given, so you will have to reduce the net capital gain from your taxable income. If it is included in this, huh, guys, if it's mentioned that's not included, then you don't have to reduce any capital gain. Okay, now let's understand the difference between two terminology, that is QTB, qualified trade or business, or SSTB, that is specified trade or business. Can anyone brief that this thing, like who have done it yesterday or who might have just gone through the theory? Anyone? Okay, so no one, I think no one got the time to, just a minute. No one got the time to read this, I think. Okay. So see, QTB is what? Where you're doing a qualified trade or business. Okay, let's say a manufacturer is there. Let's say a manufacturer of particular wafers is there. So the product is important. People are not going to remember the person who manufactured it. Okay, there are let's say 50 workers over there who are working in that manufacturing unit, so no one is going to remember the name of that person, but people are going to remember the taste of that wafers, right? So the product is most important. In that case, that type of business is called as qualified trade or business. Okay, it's simply trading business. Got it? Where the tangible products are involved. Next is SSTB. So SSTB means what? The particular person is important. Let's say a doctor is there. So we need a specialist, a special doctor to treat a particular type of treatment. So that person is important. That will be called as specified trade or business. Got it, guys? Where the product is important, you can just remember like that. It will be a QTB. Where a particular person, let's say CPA is there, without his PT, without his signature, you are not going to file the return. You are not going to, I can say, file the audit report, right? The signature is important. That person is important. His own PT is important. So the name of a person is important. Here, the product is important. Okay, whatever product they are making, it is important. Here, the name is important. Okay, got it? Any question in difference between these two, guys? We'll read it from Glim book also. Right now, we are just understanding the calculation part. Okay, so in that, there is a bit heavy language which is mentioned. But first, I'll cover it from this book and then we'll move to that. All right. So calculation of QBI, how we are going to calculate. See, we know that it is 20%. Amount of deduction maximum is 20% of QBI, right? But how to calculate it? It is divided into 3 steps. Okay. Out of this 3 steps, whatever is the lower will be your eligible deduction for qualified business income deduction. Okay, where it comes, after deducting the standard deduction, there is one more deduction which will be mentioned, that is 199A deduction. That is nothing but your qualified business income deduction. If you have either Schedule C or you have a partnership income or a S corp income, there will be this calculation which will be made. In software, it is very complicated to understand how software is going to calculate. But in our theoretical, for exam purpose, you will have to understand that calculation. Okay, so let's move further. See, these are the 3 steps. I'll first explain the first and third step. It is very easy. First step is what? 20% of QBI. Okay, and what is QBI? Ordinary business income minus ordinary business expense. Got it? Now, third step is what? It is like all these 2 steps will fall in the inner box. Okay, so this step 1 and step 2 are there. Overall limit is your step 3. So can I say out of this 3, whichever is lower will be my qualified business income deduction. Okay, just remember like this. So step 3 is what? 20% of taxable income. You guys are aware about taxable income. So it will include your wages income, it will include your interest income, it will include dividend income, it will include your Schedule E rental income, all passive, active, all income. You have to just sum it up, that line before, sorry, after reducing the adjustments, you receive a AGI, right? After AGI, you are going to reduce the standard deduction. So once you did reduce everything, you take all the benefits and all, that amount is your total taxable income. 20% of that, or 20% of QBI. Okay, these two amounts are logged. Now, step 2. Before moving to step 2, any question till now, guys? Okay, so see, this topic is very easy
So
to
one
understand.
question, Siddhi, just one question. Like
Yeah.
first we need to 20% of QBI, and also we need to check the 20% of taxable income.
Yes. So even though it is mentioned step 1, 2, 3, but I'll recommend this. This is your first. This is your second. This will be easily available. In step 2, we are going to calculate based on phase out limits. Sorry, here we are going to use phase in. Okay, so don't go on the terminology. I'll explain how to calculate it. So step 1 and this 3 will be easily available. For 2, you'll have to do the calculations. Okay, 20% of QBI or 20% of taxable income. Remember,
So
like
the
this.
question
Okay.
will be, means when the question is there, so they will provide us the QBI expenses and definitely the taxable income definitely there in the question, right? These two
Yes,
things
they'll
we will
provide
get in the
this
question.
too.
Okay.
Correct. I'll upload today only. So many QBI questions are there. So you can solve that practical also, theory also. In exam, there will be hardly 2 questions on this topic. But if they ask these 2 questions and it's of 2 marks, because if practical is asked, then 4 marks will be, easily gained. People used to leave this topic in option because they think that it's not carrying any weightage. But actually, it is very easy to understand. No need to skip this topic. Okay. So now let's understand this step 2. What I was saying is, once for the first time, if you're learning this topic, learn it very thoroughly. Else you'll never understand this topic. So many questions will come in your mind. So right now only you can ask me any questions which comes. Okay. So see, here for step 2, we are talking about QTB. Who is QTB? Where the product is important. For Sstb, we have different calculation. Okay, guys. So right now only QTB we are going to understand. First, the phase out limit over here is taxable income if it is 1,70,050. Don't have to remember this also. This they will give it in the bracket. Okay. The phase in limit for the QTB is 1,70,050, and the upper limit, you just have to add 50,000 to it. Every year this lower limit keeps on changing. Last year it was something different amount, but this year it is 1,70,050 plus just add 50,000. This will be your upper limit. Okay. Now what you have to do is you have to check your taxable income where it is falling. Okay. So just a minute. Yeah. So let's say your taxable income is falling less than this. What is your step 2? Your step 2 will be nothing but just your 20% of QBI. So if it falls under this scenario, your step 1 will be equal to your step 2. Got it? 20% of QBI. In first scenario, your QBI into 20% will be your step 2. Now I'll take third scenario first. In second, there is a huge calculation. Third scenario is what? If it is more than this upper limit. Okay. If it is more than this upper limit, then you will have to get 3-4 things on hand. Like you should have your QBI, you should have your taxable income. What other things you'll have is, what is your W2 expense? What is W2? Let's say you are an employer, you will be providing salary to other employees, right? If you are a sole proprietor, or let's say you are working you're running your own shop, your own small sole proprietor business, but there might be possible that few employees are working for you. Okay, so whatever salaries and wages you are paying them, you will take that amount. Okay, first you will take that amount and compare it if it is less than QBI or it is more than QBI. Got it? I'm going very slow, guys, because so many things you have to remember in this. Wages expense which you are incurring, is it less than your qualified business income? What is qualified business income? Again, your net profit, ordinary business income minus ordinary business expense. Is your wage income which you are giving it to your employees are less than your QBI or more than your QBI? If it is more than your QBI, then simple, your third step will be 20% of QBI. Okay, in third step, we'll have two options, the QBI into 20% if your W2 is more than your QBI, qualified business income. Now it will come in your mind, like if you're not earning, let's say you're earning just $50,000, and is it possible to pay more than that to your employees? Right, your employees are going to get a fixed salary. It is not based on your profit, even though you earn or not earn, or if you, even if you're incurring losses, you have to pay salary wages to your employees. Okay, so in that case, if the W2 expense for you, right, as an employer is more than your QBI, directly straight away take 20% of QBI. Okay, now this thing is, if your W2 is less than QBI, okay, means you are properly paying to your employees, you're also earning the profit, right, and your taxable income is also more than this amount, what you will do is take 50% of whatever W2 expense you have incurred, or either take 25%, just a minute, 25% plus 2.5% of unadjusted basis of qualified property. What do you mean by unadjusted basis? When you start the business at the very initial stage, whatever asset you have brought into the business, right, just take 2.5% of that unadjusted. Unadjusted means what? You are not going to deduct any depreciation, right? You can add any additions. Let's say in year one, I've purchased the furniture. In year two, I've purchased some extra furniture. So just sum up all the assets, only cost which you have incurred. So that is unadjusted basis. Okay, take 2.5% of that plus 25% of W2. Okay, this two will be compared with this two, whichever is higher. See guys, here it is higher. Whichever is higher will be your this step 3 answer. Okay, so can I say here either 50% of W2 or 25% of W2 plus 2.5% of unadjusted basis of property. Okay, this scenario can be used if your QBI is what? Less than W2, means you're running a proper business. This will be, I have remembered like this, if you're running a proper business and everything, I'll use this limit. If I'm incurring losses, why? Because I'm paying extra amount to my employees and not having that much of income. So if my W2, sorry, here I've mentioned in wrong manner. If my W2 is less than QBI, I'll just directly take 20%. If my W2 is less than QBI, I'll take this amount. And if my W2 is more than QBI, I'll directly take the 20%. Okay, step 3 is clear, everyone. Third and first one was easy. The main challenge is in the second calculation. Any question till now, guys? We'll see examples also over here. Numerical examples also I have mentioned for remembering it. So now let's see. Second step, what it is mentioning is whenever your taxable income falls somewhere between this, okay, between these two amounts, lower limit and upper limit, the difference is what? 50,000. Okay, so there are steps. First, what you are going, just look at this step. Okay, what you are going to do is calculate the phase in limit. Okay, what do you mean by phase in limit? Taxable income you are going to reduce it by, just a minute, here the limits are still the previous one. You are going to reduce 170050, the lower limit. Okay, so see, taxable income minus lower limit divided by the difference is 50,000. Okay, let's say it is 85%. Now what you are going to do, the second step which we did now over here, see, you are going to take 50% of W2. That is your, in our example, it is 15,000. Okay, you are going to take QBI deduction. What is the maximum QBI deduction? We are going to get 20% of QBI. Okay, take the excess of this two. Okay, 15,000. If we have used a third scenario, our this allowed figure will be what? 50% of W2. Only this first step you have to see 50% of your W2 and compare it with your maximum QBI deduction. So can I say my excess QBI deduction is 20,000, which is more 5,000 in extra. Okay, now this, from this extra, I am going to disallow this 85%, that is 4250. I am going to reduce or disallow from my total QBI deduction. Whatever will be my QBI deduction. What is my QBI deduction? Taxable income, sorry, QBI income, qualified business income into 20%, or taxable income into 20%, whichever is lower. Okay, so your taxable income is 207,400, right? And QBI is, yes, Shrikar, any question?
No, ma'am. Actually, I lost the connection in between, so that's fine. No problem. I'll check it again. No problem.
Yeah. Anyways, I'm going to repeat it again properly, so no issue. Okay. So see, this taxable income into 20% or 1 lakh into 20%, whichever is lower will obviously come this 20,000. So from this 20,000, I am going to reduce the disallowed figure of 4250. Got it? 15,750 will be your qualified business income reduction and not whole 20,000. Okay, so let's understand it again properly with the example. Wait. Okay, see, whenever you have a QBI calculation, first thing which you need to keep in mind is just in whatever rough paper you're going to get in examiner, write down what is the taxable income. Okay, write down what is your, see, just like this you have to mention, write down the taxable income, mention if there is any net capital gain or not. If there is not, then just mention 0, that's fine. Then check what is your qualified business income. They'll not give you as it is QBI, they will mention you business incomes, business expense. I'll add the MCQs on this today in our Google Classroom, so don't worry, you can solve from there. Whatever is your business incomes minus your expense, that will be your QBI, qualified business income. Then write down what is your W2, because you need this for the calculation of our 50% of the wages. Okay. Then if they have given an unadjusted basis, then that's fine. If they have not given, then also it's fine. Anyways, we are going to take this 50%, the first step, 50% of the business wages. Okay, so business, if what type of business it is, because see, if it is a SSTB and you make this QTB calculation, it will be wrong. SSTB has a totally different calculation. Okay, so see, business is a QTB in our case. First step is what? Calculate this stepwise manner. First step is 20% of QBI. What is our QBI? 1 lakh into 20%. So that comes to 20,000. Our first step is fixed. Now let's see the third step. The third step is taxable income into 20%. Right? In our example, taxable income is 2,07,400 into 20%. That comes to 41,480. Okay. Now let's see the second step. Our taxable income is 2,7,400 to 2,07,400 comes where somewhere between this. Okay. So here even the calculation is same. We did in every that credit phase outs and everything. Lower limit, whatever is your taxable income, whatever is your taxable income minus lower limit divide by 50,000. But what they are saying, this much is disallowed. Got it? What I'm trying to say? This is a phase in calculation. In everywhere, what we were doing, but this 85%, right? Everyone is clear how we are going to get the 85%. Lower limit, whatever is your taxable income minus lower limit, divide by whole 50,000. 85% is your disallowed amount. Got it, guys? Any question till now? Okay. So this 85% you are going to disallow from the difference between 50% of W2, okay, or the QBI deduction. You are going to reduce your QBI deduction and make it to 50% of W2. Whatever is the difference, multiply by 85%, this much will be disallowed from your step number 3. So in step 4, what we are going to see is step 3 or step 1, whichever is lower, what it comes 20,000. So we'll reduce this 4250 from 20,000. Okay. Else what we would have been done was, if let's say this is lower, let's say this is 15,000. So we are going to reduce this disallowed figure from this 15,000. Got it, guys? The step which you need to understand is step 1, step 3, and then you calculate step 2. Step 1 and 3, whichever is lower, right? Your QBI into 20% or taxable income into 20%, whichever is lower, take that and disallow this much amount, which we calculated in the step 2. Okay, any question till now, guys? If you understood this now, the SSTB will be easy to understand, because SSTB is bit complex than this, and in exam the weightage of SSTB is not that much, but we can't say anything. If they come up with a very difficult paper, they might ask SSTB also. Okay, see, first calculation was very easy. Just take a 20%. What is your first step? 20% of your QBI. Third step was 20% of your taxable income. But remember, here they have given the capital gain, right? So QBI will be what? 50,000 minus, QBI is already given. QBI is 40,000. Taxable income is 50,000, but you are going to reduce the net capital gain of 5,000. So that will be 45,000 into 20% or 40,000 into 20%. Got it, guys? So whichever is lower, we are going to take it as it is. If it is less than this amount. If it is more than this amount, here the example is given. You will write down the same in same sequence in exam also. Taxable income, then note down the capital gain. What is QBI? What is W2? Is there any unadjusted basis of property? So it is mentioned here as 80,000. So what we are going to do, 80,000 into 2.5 plus 25% of your W2 paid or 50% of W2 paid, whichever is higher, you will be taking over here as a step 2. So higher means 15,500. Step 1 is 20,000 and step 3 is 44. So whichever is lower comes to 15,500 will be your QBI deduction. Got it? Here, see, W2 paid, you will compare it with your QBI. W2 paid are what? 31,000. So can I say W2 paid are less than, means my business is earning profit, it's going well. So I'll use that 25 and 2.5, that criteria. Got it, guys? Any question till now? Okay. So let's read it a little bit from claim book. Okay, so here, see, here they have mentioned that what is qualified business income deduction, okay, and what is SSTB. So let's read one by one. When Congress passed the TCGA Act, it reduced the C Corp tax to 21%. See, here they are explaining why they come up with this. In 2018, from 2018, this is applicable. In 2018 only, the TCG Act was passed to, match up certain deductions to give certain benefits to the taxpayers, and in some areas they have increased or reduced the taxes. So at that time, the C corporation, this is a corporation which we'll see in the second part. C corporation is a kind of entity where the tax rate was applicable to 21%. Okay. Now, due to that, they don't want to disadvantage the owners of pass-through entities. So pass-through entities means what? Those entities, there are C Corp, S Corp, and partnership. So here they reduce it to 21%. But here the tax rates were not reduced, right? The highest tax rate was 37% because their income was passed through to the shareholders or the partners, and the shareholders and partners were going to include the income in their 1040 return. So they were feeling like we are still paying the higher taxes. So that's why they come up with this qualified business income deduction, where in their individual tax return they will get a deduction on this share of their partnership income or S corp income. Are you getting this point, guys? Why this thing came up for QBI deduction? So QBID is the last deduction before determining taxpayers' taxable income. Means last deduction is our standard deduction and itemized deduction. Just after that, you will get a 199A deduction. Okay, after calculating all taxable income deduction, everything, the last deduction is this, and this is your final total taxable income. Based on this, the tax rate will apply. Okay, so this calculation which you are going to do is based on your taxable income, okay, just which is mentioned over here. Okay, so for QBID, Congress divided pass-through entities into two categories, Sstb and QTB. Okay, certain will be providing only services and some will be providing the goods and like trading business. Okay, so they have divided this thing into two categories. The reason for two categories is that above certain threshold of taxable income, each QBID is subject to varying limitations. Okay, it might be possible that if we keep a same rate of deduction, it will be unfair for those who are into manufacturing business, because they are going to have a heavy W2 expenses, right? Let's say S corp is into manufacturing business, something. Okay, so the W2 which is going to paid out will be a very heavy. But let's say if you are into service industry, let's say only two partners are there, the W2 wages will be at a lesser amount. So you will not get that much benefit. So that's why they have divided it into two different parts. Got it, guys? So this is about QTB. When we do the SSTB, we'll come to this theory part, okay? Now here, whole calculation is there, guys. You just go through it. It's overall what we have done right now. Step 1, step 2, step 3. All things are mentioned here in theoretical way. Okay, I'll just explain few terminologies which are not, I think I might have like, you might have not been aware of that. So I'll just explain that. First step is every pass-through entity must first determine its QBI. Pass-through entity means what? They are talking about partnership firm or a S corporation. Okay, so partnership firm or S corporations, QBI, first of all, you will determine. Okay, the information will be reported on the Schedule K1. Schedule K1 is nothing but when the partnership firm and S corp is going to inform their partners or shareholders about their income share of income. Through what means they are going to communicate their income to them? It is a Schedule K1. Got it, guys? Schedule K1. Or let's say if you're not into any partnership firm or S corp, it will be straight away there on your Schedule C. Your ordinary income minus expense is your qualified business income. Same way, partnership firm and S corp's income minus expense is their net income. They will communicate that amount, that ordinary business income. If you guys are working and have seen the K1, the box number 1 is what? Your ordinary business income. That is only your qualified business income. Got it? You don't have to take any net capital gain, short-term capital gain or loss, or any other expense deduction. You don't have to take. Whatever is there on your box one as an ordinary business income, only that you are going to take. Okay, just remember this thing. Day-to-day expenses which you incurred on daily basis. Let's say repairs and maintenance is there. Then we have our salaries and wages. Then we have utilities expense, right? All those day-to-day expense will be taken. But let's say you have sold some property and you have earned a capital gain. So that is not your ordinary business. That will be in a separate checkbox, maybe fifth or sixth box. It's there, short-term capital gain, long-term capital gain, net capital gain. So that you are not going to take. Only box number one you have to take. Okay. Sum of each pass-through entity's QBI must be then tested against the taxpayer's taxable income. Right? This is what it is saying is whatever is a taxable income, whether it is falling at which level, 1,70,050, or is it falling under 20 lakh 050, something like that. Okay, so you have to just check. Here the difference is just 50,000. I always used to remember like this. I used to remember the lower limit and just add 50,000. Okay, just you have to check. The step 2 is mentioning how you're going to check the phase in range. Okay, phase in range, in that you will be checking. So in this case, this phase in range which we did was related to single filer. Okay, single filer. Just multiply it by 2 and remember the MFJ limit. Okay, just remember the lower limit 340,100, or just multiply by 2. You have to just remember one limit, that is 17,050. That's it. Add 50,000 to make it upper limit, multiply it by 2 to make it as a MFJ limit. Okay. The detail of this process are complex and beyond the scope of exam. Means in exam, they are not going to ask a very detailed calculation. Just remember, if you want to skip this part, this theoretical part, then also it's fine. Whatever we have explained in the chart, it's enough for the exam. Okay, just do those 3 examples for each type of scenarios. That's it. No need to remember more from this topic. Okay, any question till now, guys? We have done all the steps, calculation. You understood the meaning of SSTB, sorry, QTB, and where it is going to be shown on your 1040 return. Any question till now, guys? We can move to the SSTB then. Yes. Okay. So let's move to the SSTB. It's, sorry guys, just a minute. Okay, see, SSTB over here will have same limits. Here also you have to compare the taxable income, whether it is falling less than this or above than this. Okay, these are all limits which are mentioned here for single filers. Now guys, you can just mention over there. And anyways, they don't expect you to remember these limits. Okay, so for QTB, SSTB, it's fine if you don't remember it. For taxable income, if it is less than 17,050,000, simply take 20% of QBI. This step is same as that of our QTB. Okay, so let's say example, your taxable income is 50,000, net capital gain is 15,000. First of all, exclude the net capital gain from your taxable income. Take that amount into 20%, or whatever is a qualified business income given to you, take that amount into 20%. Okay, whichever is lower, you will get the deduction. So 50,000 minus 15 into 20 comes to 7. 40,000 into 20 comes to 8,000. So 7,000 will be your qualified business income deduction in step first limit. Okay. Second, if is your taxable income. Let's move to the third one. Third one is very simple. In SSTB, as soon as your taxable income goes above this limit, right, you are not going to get any QBI deduction if you are a SSTB. But if you are a QTB, there will be a different limits which will be applied based on your W2 expense. Got it? Here you're not going to get any reduction. Simple, this one and this one. Now, second step is a little bit complex, and don't expect that this is going to come at all in exam, because this type of calculation is not of 2 marks. It's of I can say 4 to 5 marks, but they are not going to ask this type of question at all. But you can remember this calculation. Sometimes this can come, the second step of our QTB. Okay, here what is the example? We'll directly jump the example. If your taxable income is 207,400, same example is there. Net capital gain is 0. Qualified business income is 1 lakh, and W2 which you have paid is 30,000, and QB unadjusted basis is 0. So step 1, what is your maximum QBI deduction? 20% of your 1 lakh. Okay, so first step is clear. Now, the third step, okay, it's step 2 only, guys. So phase in, what we will do is, same way we'll calculate that 85% we came, that was disallowed. Now you will see what is allowed. So remaining 15%, can I say this is allowed? Okay. So next step will be disallowed loss calculation. Apply the 15%. This allowed one will be applied to W2 into 50% limit. Just a minute, guys. Yeah, W2 into 50% limit is what? 30,000 into 50%. That comes to 15,000. Apply this allowed limit. Here we are calculating in a reverse manner. Allowed is 15%, right? So we'll apply this allowed limit, that is 3,000. Or apply 15% to QBI. What is your QBI deduction? What is your QBI deduction is 20%. So 20,000 into 15%, that comes to 2250. Okay. Now, once you receive this two amount, you will have to take the difference of this two. That comes to 750. Now, this 750, you'll have to multiply by 85%. This much will be disallowed. So what was your QBI? 20,000. Disallowed 837, right? So, just a minute, guys. Okay, this 637 will not be deducted directly from 20, but here in the step, third step only, when you calculated this 20,000 into 15%, right? Allowed, out of that, you're going to reduce 637.5, right? So 3,000 minus 637.5, that comes to 2362.50. This much amount, or 20% of your taxable income, that is 207,400 into 20%, whichever is lower, you will get the deduction. Got it? So this is a very complex double calculation is there in this thing. Over there, it was simple. Just take a difference and reduce the disallowed percentage, right? Take a difference, reduce the disallowed percentage. Over here, what we are doing, first we are applying this limit. First, we are applying this allowed limit to QBI into allowed limit. Okay. So this is your amount which you need to remember later on. Out of this, you are going to reduce something. Okay. Then we have W2 into 50% into allowed limit. Okay. So this two difference you are going to take, right? And whatever is the difference, you are going to multiply it by 80%, 85%, that is disallowed limit. Okay. This disallowed limit will be reduced over here. This amount, whatever you're going to get, is your step 2 answer. So compare it with your step 1, that is 20% of QBI. Step 3, 20% of taxable income. And you'll compare this, whichever is lower, you'll get the deduction for Sstb. Got it, guys? I'll put so many numerical examples, MCQs in the Google Classroom, so that you can solve it and get this concept clear in your head. Okay. So any question in Sstb till now, guys? So those who are working practically, have you ever seen this type of calculation Have you ever done this type of calculation, or just enter everything in the software and it does?
Yeah, I saw the thing in the under the itemized deduction in the QBI 199A, but I never done the calculation in my practical life. It's very
Yeah.
rare.
Actually, there is one tick in software, so we just mark the tick, and it is automatically calculated in
Yes.
software. Yeah.
So in exam, they expect us to remember how we are going to calculate it. Like even after becoming enrolled agent, this thing can be used for tax planning purpose, right? So it's a very huge topic. We are not going to get into that thing. But if we know the proper calculation, now you can plan accordingly your wages, you can plan accordingly what assets to be purchased, whether you want to ask your client to go for purchasing a new asset or new, even the property cost will be there in unadjusted basis, all these things. Okay, so simple it is, but it's a very lengthy thing. But no worries, let's move to our book. You guys can just refer our summary book. No need to read each and every page of your glam book. See, this exam is of only applying the law, not learning and mugging up the law and the theory. Okay, the mugging up thing will come in part 3. For that I have a different trick. We'll see that in over there. But right now, just try to understand the concept. Okay, for SSTB, what it is mentioned, specified service trade or business is any trade or business in which principal asset is the reputation or a skill of one or more of its employees. Okay, let's say CPA firm is there. All the CPAs are the partners. 4 partners are there. So all 4 skill is important, not the product. Okay, specifically SSTB includes the following types. What it includes: health, like doctors, law firm, accounting firm, actuarial science, performing arts, consulting, athletics, financial services, right? To those who are giving advice, and based on their advice, we are going to invest in some property or some investment securities or anything. So their advice is important. Okay, brokerage services are there, shares and security brokerage service. So this all kind of business can be called as SSTB. Okay. Also, the SSTB is any trade or business wherein principal earns income. Okay, a principal is going to earn income, that is fees, licenses or compensation for the following activities: either endorsing the product or services, or use of a principal likeness, image, name. In short, the mode of income is your fees or commission, like that kind of thing. In trading business, what is the mode of income? It's directly receiving the gross receipts. Okay, gross receipts in the form of let's say directly you are selling it to the normal retailer. Like, I hope you have already understood this, what I'm trying to make it clear. So reputation skill, here one example is there. Bill owns a Bill's Plumbing sole proprietorship, and Bill's Plumbing motto is a Bill is very skilled plumber with a great reputation. According to the regulations, because Bill's Plumbing does not involve endorsement, compensation for use of one's likeliness or appearance, fees, Bill's Plumbing principal asset is not a reputation or skill. Okay, of one or more of the employer or the owners. Thus, Bill Plumbing is not considered as a SSTB. So what 3 words you'll have to see is whether you are using principal likeliness, image or name. See, plumbing service, I know he is important. He is providing the services. But is his name that much reputed or anything? Let's say a very huge plumbing company is there. In that, only one plumber is there. Everyone is requiring service of that one plumber. So that will fall under SSTB. But let's say Urban Clap is there. We have that Urban Clap company in India. So we just book a plumbing service over the phone. Okay, so that unknown plumber which are coming, we don't even know the name or anything. It's like, it's not reputed name and he's providing service. That is not a SSTB. Got it what I'm trying to say? The person should have a huge name, image, likeness and appearance, fees for an event or media performance. Okay, or it's endorsing the product or services. Got it, guys? So this three you can just remember in exam, like if they want to ask theoretical question, they can go for whether this type of service is a QTB or a SSTB. Okay, so next is, I think there is calculation for SSTB also. Where it is? Okay, they have not mentioned over here, I think. No worries. We'll move to the next topic now. We still have 10 minutes to go. So AMT will be done in 10 minutes. That's fine. Just a minute. Yeah. So AMT is simple. You have to remember this formula. Just like in India, we have that minimum MAT and AMT is there. Okay, in India also we have that calculation where some items are differently treated in the tax, just like in those who are working, just like in C corporation, S corporation, we have M1, M2 adjustments. Just like that, there is a calculation for AMT, alternate minimum tax. Means whatever tax you are paying on your 1040 return, that's fine. You have to compare it with the AMT calculation, which we'll do over here. Whatever is the higher amount, you have to pay at least that much tax. Let's say as per 1040, you are getting a tax of 10,000. But as per AMT calculation, you are getting a tax of 11,000. So current year, you will be paying $11,000 as a tax. And the 1,000 which you're paying extra is your AMT credit. Okay. Now let's say next year the reverse case happen. That is 1040 income is 11,000, but your AMT is 10,000. So can I say 11,000 I'll have to pay minimum, whichever is higher you'll have to pay. So 11,000 I'm going to pay, but if I'm going to pay 1040 taxes, I'll take this 1,000 as a credit, which was paid by me extra in the previous year. But let's say again now here the credit becomes 0. Okay, now next year again, here the 1040 income, like the tax as per 1040 is 12,000, and as per AMT the tax is let's say 15,000. So 3,000 is your credit. Next year again, your 1040 income is 12,000 and your AMT income is 16,000. So you cannot use this credit if you're going to pay the AMT amount only. If you're going to use this 1040 amount, you can use this credit against that. Got it, guys? What I'm trying to make you clear. This question was there in the exam. So applying the AMT credit, you have to understand that thing. Okay. So let's see how we are going to calculate the AMT amount. What is the minimum tax which we are going to pay? So as per the TCGA repealed the old corporate AMT for tax year beginning after December. Means in 2018, you can just remember this, in 2018, so many things changed. That is TCGA Act came and they, came up with many laws which will be followed till 2025 tax year. Okay, so a new AMT will be in effect for tax year 2023. However, there is no corporate AMT for the tax 2022. So for 2022, if you are appearing in current year and if you're appearing in the next year, there will be some change in this AMT. Okay, so those are appearing in current window, no need to worry. But for next window, we'll see what will be the amendment in this. Okay, so see, let's see the calculation. AMT is the income tax that is in addition to regular tax. And the form number which is used to calculate AMT is 6251. Okay, 6251 is the form number in which whole AMT calculation is done. So what is the formula? First of all, we'll take a taxable income. Taxable income means after deducting our adjustments, after deducting my standard deduction, after deducting my QBI, everything when I deduct, and whatever is my taxable income, ultimately on which the tax rate is going to be applied, that I'll take. I'll add tax preference items. Okay, the list of tax preference items will be given over here. Okay, I'll add this tax preference items to my taxable income. I'll add standard deduction. So as I mentioned, this taxable income is after reducing all your adjustments and everything. So I'll add back the standard deduction. If the taxpayer has not taken the itemized deduction, like let's say taxpayer has taken standard deduction of 25,900 or 12,500, whatever they have taken standard deduction, instead of itemized, we'll just add it back. If they have taken itemized deduction, right now we are not going to do anything over here. We'll just add if they have taken a standard deduction. Okay, then we are going to add and less certain other adjustments. So what are those adjustments? We'll see over here in the next pages. Just a minute. Yeah, here it is. See, this 4 items of tax preference items, and these are the other adjustments which we are going to do. Okay, this will be your alternate minimum taxable income. Now, out of this, there is an exemption amount which is provided. So out of this taxable income, this is the base standard deduction which is provided. See, this standard deduction, we are going to add back 25,900. Why? Because later on, AMTI has a different standard deduction. So that much amount only we are going to reduce. Okay, for 2022, if you are a single, then you can reduce 75,900. Okay, now let's say your income is more than 53,900. It will start phasing out by 25%. This amount you have to compare with this taxable income, not AGI. It's nowhere mentioned that your AGI is more than this or that. Here in AMTI, compare your alternate minimum taxable income with this phase out. No need to remember this. This keeps on changing each year. Okay, they will provide you that exemption amount, AMTI exemption amount, they'll mention you in the question. Okay, so when you reach, see, this you have to calculate tax preference, you have to add standard deduction, you have to add and reduce certain adjustments. There you are going to receive is AMTI. If you calculate this thing only wrong, the whole question will be wrong. Okay, once you calculate this, reduce the AMTI exemption amount, which will be mentioned in the question only. This is your tax base multiplied by the rate. Rate is what? On this, there was one theoretical question in exam. They asked what is the AMT rate. If you are a MFJ filer and your this alternate minimum tax base, guys, not AMTI. AMT base is 2,06,100, then the taxable income is AMT is 26%. Whatever is more than 206, remember this limit. Okay, this you have to remember. It was there. The question was there on this limit only. Only one liner question was there, and no one remembered the limits. So please make sure you remember the 26%, 85%, and the amount is 2,06,100. This might change in next year, but don't worry. As I mentioned, we are going to provide all the amended sessions again. Those are going to appear in next window. Okay, so 206,100, on that it's 26%. In excess of this, it is 28%. So can I say what is the QBI deduction? Maximum is 20%, but AMT maximum is 28%, 26 and 28, depending on your AMT base. Got it, guys? So see, this in very detail, we'll again do it tomorrow. What is your tax preference? How you're going to do the adjustment? I just want you guys to just read it once, because those who are working practically now, actually, they can at least recall few items from this. Okay, so, and those who are not working, that's fine. You can just read the theory for now from this a Gleam book. Okay, calculation sums are rarely asked on AMT. They'll just ask one theoretical question based on this percentage, but still it is there in our course, in our syllabus. We'll do it. Second thing, remember, if in your paper, if they ask the QTB question, they'll not ask AMT. If they ask AMT, they'll not ask QTB, like that. But you have to do both the things thoroughly. Okay, so today I'll upload MCQs on QTB, SSTB, and AMT also I'll upload. You can practice AMT maybe tomorrow when we complete these 3 topics. And then we are going to move to our next important chapter. See, other taxes also I'll cover tomorrow only. Some of them are already done. I just need to you guys to recall those things. I'll revise that things. Okay, the SUTA, FUTA, all those we have already done. So tomorrow we'll complete AMT and other taxes. Later on, we'll start with our main important chapter of property taxes. Property related chapter, we have study unit 9, 10, 9, 10 and 11. Skip those 3 topics from Gleam book. Only we are going to use the summary book, because from those 3 topics, a lot of theory is mentioned in the book. In exam, only and only practical question are going to come from this property topic. Okay, so I'll cover it each and everything, but you guys will have to trust on me. Those are having exams in October. Skip those 3 from Gleam. Please refer only and only summary chart book. Okay, those who are having exams in next year, they want to just explore it, just go through the theory, but it's a very lengthy theory. Trust me guys, summary chart book is enough for property chapter. Okay, so that's it guys. If any question you guys have or query, just let me know in the WhatsApp group. And Ankit, I know your recordings are yet to be uploaded. I think he left. No worries, I'll upload the doubt solving session recording today only. Okay guys, thank you so much. Have a nice day.
Thank you. Sstb, can you just stay for 1 minute?
Yeah. You can ask, no worries.
Oh, okay. Okay. So I have that the chart actually I have prepared for myself for the study.
Okay.
So the thing is that some things I have means my doubt is that I'm revising the thing, right? And by the time it is continuing class, I'm revising the old one also and continuing with the current thing, right?
Mm-hmm.
That is my concern actually. Mostly means last 2 to 3 days I am revising the first chapter, means like the prior year returns, residency and all. Now I have started to do the credit. So credit chapter will complete the whole thing, means from claim and also the recordings. Then I can go with the MCQ of you have uploaded, right?
Mm-hmm. Correct.
Okay. That's only.
So yeah, so you have to balance both things. Because people who are having exams in October, make sure you're also revising whatever is done till now, like on daily basis. At least take one small topic from our previous sessions which we have done. Okay, if it's a very easy topic, don't waste time in watching again and again the recordings, right? You have to invest your time. Let's say credit topic is there, and if a particular topic you are not able to understand, then only view the record. That is for your convenience only, because as much as you do the self study now, you guys will able to grasp the topics, and you have to practice a lot of MCQs. तो आप अगर खुद से नहीं करोगे सॉल्व MCQs, तो आप एग्जाम में नहीं कर पाओगे. इसलिए मैं डेली का मैं इसीलिए डाल रही हूँ MCQs कि एटलीस्ट आप उतने तो कर ही लो, उसमें सब कुछ कवर हो गया. उसके अलावा नहीं कर रहे हो, कोई दूसरा साइट या उतना टाइम नहीं मिल रहा है, तो दैट्स फाइन, पर उतने तो करो.
कल मैंने किया था, वो एनरोलमेंट एजेंट से कर रही थी, पर उसका ना सारा ही क्वेश्चन गलत हो रहा है फॉर चैरिटेबल कंट्रीब्यूशन, क्योंकि चैरिटेबल कंट्रीब्यूशन या कुछ का किसके बैलेंस थोड़ा वो है. मतलब I know this is the right answer because I have uploaded, you have uploaded the things, I have done it correctly, but in that topic that is actually coming for 2021 thing na. So that is why it means theoretical part it is going correct, but the calculation part it is going wrong because of the limits and all. That is why. So is any other thing you were supposed to give us the thing, means where you are getting downloaded the things? Do you have any other thing to practice? Because the MCQ which I have uploaded, once I done the thing, so again when I'm doing, so I have remembered the things what will be the answer. Okay. So
Okay. So don't cheat like that. Huh? Okay, so I'll see like today if I can find that PDF or some other site, because see, I have taken that. I've not taken the subscription because when you see enrolled agent, what is happening? That site is not showing any option to
Update the
unsubscribe
things.
or anything, and it
Uh,
is deducting the amount also every month.
uh, uh,
So that's why I'm waiting for, I am going to develop my own website only for the MCQs, but it
uh,
is going to take time. So that's why I'm providing
it
you.
will not be by October mostly. It would
Yes, and
take some time.
not by December, not by December. It will
Okay.
take almost 4 months they have mentioned. So what
Achha.
I'm going to do, from wherever I'm going to get the MCQs, I'm going to upload it on the Google form, or that PDF which I provided was
Yeah,
that
that's
MCQs.
also better. That's also better. Means for credit chapter, you have enough. Means I don't think means more than 85 questions are there. So credit is enough. Means I don't think so. Out of that, we can have any credits question. But other and also the residential portion means resident dependent. You have uploaded a lots of questions. So out of that,
Yes.
I don't think there is any other gross income. Yes, gross income. I need a gross income. If you haven't uploaded the total MCQ of the bunch of MCQ. Just see if possible
Okay.
for the gross income. It should be better for gross income. Means mostly it is done, and
Okay.
the bigger chapter is left. So the gross income thing, if you can upload the thing, so it's better.
Sure, sure.
Okay.
So I'll do that. Gross income topic, I'll upload it. No worries.
Yes, gross income.
Okay.
Okay.
So any other question, guys? Anyone else who want to ask anything? And those who are lagging behind and not able to attend these sessions, or you have not yet booked the exam date, don't worry. You can join anytime in our next session. Every 2 months we will be having our new batch for part 1, 2, 3. So whatever you want to attend, whenever you want to attend for part 1, later on also you can go for it. Okay, that's not an issue. And in April, like in the month of March and April, we will be coming up with the amendment sessions. In that also, you are appearing in the next window. Maybe by chance, if they are not opening any slots in Feb, you will be appearing in next window. So don't worry about that. Also, I'm going to cover each and every amendment and everything for the next window. Okay. So thank you guys. Have a good day.
Thank you. Thank you.